Welcome back. We are here discuss and analyze finance and economics. Today we are going to talk about the asset classes. We have in very excited in stock market because that's asset classes. The prices in valuation is fluctuates in trading days. In That's very exciting. We are choosing many in teenagers and that trap in many times excitement, lack of in expertise and lack of knowledge. They are in the in a rabbit hole. They are not any analyzing their investment, and they cannot, and they are not enough understanding knowledge about that. And next, and then also there is, you can get in immediate return, sometimes as very huge losses, and that depends your experience and your knowledge about and understanding about the stock picking and industry and economy and macroeconomy, macro, all things very well. And if then you have confidence to pick a stock, you can uh, choose in, you can look in picking stocks individually. If not, you can go to some pools, investment pools, and you can check it out that. And if you invest in stocks, you two types of return you can typically get in form of dividends in most of time in quarterly, and also you can, when price appreciate, you can took profit from that depending the situations and participants of the market. That depends on, sometimes in very confident the participants, they are in buying mode to open, because many institutional investors focus on buying the economy look like and estimating professionals good. And then mainstream medias, they are all to towards this kind of things in financial news, and they are all promoting this, and the pile up the confidence and markets go up in all time high. And then there is any not any news in terms of in domestic, and any interruption came to market, like we are experiencing in wartime, in last time the Russia and Ukraine wartime, and before the pandemic, and after effects, that's some disruption in supply chain. There are these kind of things, this affecting markets, and the confidence gone, and the markets quickly came back to low level. And these all things you must understand before picking, you before you choosing this stock picking. And if you do, and you have not much time for these kind of notices informations to capitalize, then you go for another some mutual funds, some portfolio managements, they are doing behalf of you in your portfolio. That's better for you. And this is the channel for promoting only for education purpose you and the financial things in your life. And when you choose the mm, product in financial market, that you should confidently choose. And mm, I am valuing you for the knowledge and give you some sort of experience in my life in financial markets. And then we have in asset class in debt markets, that's giving you returns in semi-annual. And they are we are giving and money and borrowing. The corporates and governments are borrowing us money, and they are giving us for some sort of interest. They are give and they are semi-annually do this. And there are some lots of risk in this in bond markets also. You check it out in credit ratings and some default risk in there. If the corporate and governments, there are the good potential in, you can compare in US and other countries in yields of bonds, you can understand well then. And you can check it in ratings, and there are many risks related in there. In default risk, you can check the ratings and you understand well, you learn about this asset class you need as well. And some real estate asset classes we have, and some precious metals we have. And these all many different asset classes need to be focused in different changes in economy and industry, and how influence this asset class, one of which we are invested. These things you must know well. And of course we have need to goal. And why you have a goal? Because many times we have an example. If we need to speak in my our friend and some family members in railway stations and airport, and they are saying us in, we are in reach in the platform, we are reach in the country, reach in the railway station at 4 o'clock. And then we analyzing, we are scheduled that time. And we know well, we from me to in railway station, from me to the airport, half an hour distance. And we are in bef- left in our place in half an hour before. Then we can the reach in time in there. But lots of people think they are think we can, they are left in of 15 minutes before, and they are rushed to the airport and rushed to the railway station. But they cannot reach there. There is some accidents happen, the road is blocked, and also we are in late in 15 minutes. This the concept in financial markets. You have need to goal, and you can think about um, when we can think about when we are reach in that goal, how many time we took to reach our goal, and what's the average performance of the well well portfolio management they are, what's return they give in this, the what's the average return in some asset classes in stock markets, what's the return, average return annually produced in well-known asset management companies, and we can mm, compare our portfolio and in the, and we can and compare the our dream and our goal, and with that return this enough to reach that goal, the return. If you not nothing do this kind of things, then you are in, I think you are in choose at trading, because trading's this why the traders, most traders lose, 95% of losers winning is mm, winners is very low. This the cause they have no uh, determination to the return. I mean that I am not mentioning here institutional investors and hedge funds and well established, well understanding hedge fund managers. I mention here some retail investors who lost huge money from in the trading in, if it is stocks, if it is future and options. This very risky things and default risk is there, because this kind of rush for in their immediate return, and there are most of the traders losing money. And you want to patient, and you want to preparedness, and you want to knowledge, and you understand well macro and economics things and world leaders and world economies, and mm, how then you want to focus many many datas in worldwide, this using Bloomberg like the medias, and paying the huge money in hedge fund large hedge fund managers and big institutions. This they are doing that job. In individual person and retail investors, this very huge risk, most of losers in this arena, you must understand well. As always, thank you for watching. If you like it and you should subscribe, you please subscribe, and you please hit the like button, and please comments below. Thank you. See you.